Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Welcome back to another edition of Dollars and Cents with Freedman Financial. My name is Marc Freedman.
And I'm Marion Gilman.
And we're here to provide you with some financial advice in a language you can understand. Well, a lot of stuff going on in the news these days, especially this discussion about SpaceX. Have you heard of it?
No. What is SpaceX?
It seems like...
Is that a company?
SpaceX, yeah. Well, the thing is it's another Elon Musk company, and people either love or hate Elon Musk, right?
That's right. It creates a lot of tension simply because so many people are against him personally.
Some are for. He's a very polarizing guy.
He certainly is.
So
no question.
This whole SpaceX thing that you're hearing about is a stock that is likely to go public sometime this summer. In fact, they announced that they had filed an S-1 with plans of going public sometime mid-June, but things can change. Who knows what's going to happen
But that means right now that the stock is a private company. In other words, that stock does not trade on any stock exchange.
Right. And you're going to hear about this of stocks. There's a stock called Anthropic. There's another one called...
Which is an AI company.
Another AI company. And what's the other one called? Called AI something. I don't know why it's escaping me, but I should know it. But you're going to start hearing these. And look, every stock that is ever traded on an exchange started as a private company.
That's right.
And basically what happens is there's people that invested in these startups. You've heard of startups. Everybody tells me about their kids. My kid's joining this startup. It's going to be the greatest thing ever. Well, there are a few that do extraordinarily well, but most startups fail. So you got to put all that in perspective. But these are people that are taking risks.
They're taking a great deal of risk. So there are early stage investors, and then there are later stage investors. So when a company is just getting off the ground, when it's really an idea in somebody's head, they go to an early stage investor who gives them what they call seed money. So this is just to get them up and running. Once they are up and running and have a more formulated idea, then they go back for funding. But again, these are private investors. Sometimes they're called private equity firms.
Venture capitalists, they're called.
Venture capital, angel investors.
Yeah, and you might be most familiar with them by watching Shark Tank.
There you go.
Right? That's where some of these early stage investments start. But some of them take off and they get bigger and bigger and bigger. And SpaceX is certainly a large company. And you've seen their rockets go up and return.
Which is incredibly successful.
But they're talking about some of the biggest parts of SpaceX being Starlink, which is the satellite-driven Wi-Fi system. In fact, I have Starlink in my house. It works great. But it's going to go public, and what does that mean? Well, we're starting to get calls, and perhaps you're wondering yourself,
what
does that mean? Am I able to buy shares of a particular stock? Well, let's put the brakes on here. Okay, because first of all, at Freedman Financial, we do not have access to pre-IPO shares of stock, and most people don't.
That means an IPO is an initial public offering. So that is the first time it becomes a public company. Pre-IPO, there are shares out there. All of these early on investors own shares of the company. And then when it goes public, and it will go public on a particular day. And what happens, the company works with what's called an investment bank to actually create the number of shares, create a price on the shares, and to take that company public to the public markets.
And they might say, well, we think when we go public, we're going to go public at a price of $25. Just grabbing that as a number.
On June 15th.
On June 15th. The bell rings, and that price goes, let's say, to $30, or maybe down to $20.
Yep.
The minute that bell rings, you as an investor can be lined up to buy shares at a particular price. But you're probably not buying it at the price that it launched at, because the minute the bell rings, a new price has already been set, either higher or lower, and then it continues to fluctuate over the course of the day.
So before it goes public, it's important to know that the investment bankers, in conjunction with the owners of the company or the offices of the company, set the price that will go public at. So the initial price. Once it becomes a public company, then it's supply and demand in the market that sets that price.
So the big question is, well, if I can't buy 10 shares of SpaceX or any other company, why is it fair that other people get to buy it? Well, frankly, part of it is that's life. Frank, that's really the truth. The more money you have, the more money you have with leverage with stuff. But there is a very unique opportunity with SpaceX, and has been with other companies as well. But there are a lot of mutual fund companies, investment companies, private equity companies that are allowing people to invest in their portfolios now. Now, private equity firms generally require a very, very high net worth and accredited level to get into those portfolios. But general mutual funds, the XYZ mutual fund, you can throw $10 in, $100,000 in, $5,000 in, and perhaps be a participant, because the portfolio manager, who might own millions of dollars and sometimes billions of dollars in their portfolio, was able to be an early on investor in a private company, perhaps like SpaceX.
Correct.
So,
and these would typically be a growth stock investor. And those are the companies or the mutual fund companies that would have access to those private investments.
So the reason we give you this long-winded answer is that if SpaceX happens to be one of those companies that you're just all excited about, now remember, everyone was excited about Dunkin' Donuts and Container Store and all the other things that...
Don't forget, you can lose money.
You can lose money here. And maybe SpaceX is overpriced when it goes public.
That's
Who knows?
right.
Who knows, right? But if you want to be a participant, not a direct owner in that particular stock, but be a participant with others, you can do your research, go to research companies like Morningstar.com, find out which mutual funds have an allocation of SpaceX private in their portfolio.
That's right.
And if you invest in that mutual fund, you will be in part, your portfolio will own shares of SpaceX. Now, the portfolio manager has the right as to when they want to sell or buy that stock.
That's right.
Not you, but it's one way to get in. We're sharing that with you because there's been so much information out there about how you have the opportunity to buy shares of SpaceX. You really don't as the average person.
That's
you really
right.
don't. But going as a mutual fund, that's one way to get in.
Right.
If that's something you want to talk about, of course, feel free to give us a call. We can help you with the research and talk to you about that a little bit further.
I think it's OpenAI, by the way.
OpenAI, that's what I was thinking of. Thank you. So it's OpenAI, Anthropic, and SpaceX, which will be the big ones.
Right.
Secondarily, here's something that we've noticed in our office, and if it's not happening in our office with 675 clients, it's happening everywhere.
Yeah.
For those that have been invested in the stock market with a well-balanced portfolio, you've likely seen a nice performance report and a growth in your portfolio over the past 3 years. Yeah, it's been jagged, but chances are you've seen a nice response, right?
Absolutely. So in general, over the past 3 years, virtually every category of stocks has increased in value and increased significantly in value. So
when
been
things,
fantastic.
Despite the fact that you'll hear on the news, people are saying, oh, this economy is really tough. Those generally aren't people that have nice stock portfolios or investment portfolios, because those portfolios have done very, very well.
Correct.
And those same people that have those portfolios have likely been spending money at rates faster than they were spending it in the past.
That's the wealth effect. So when you see your assets grow, whether it's house values or investment account values grow rapidly, you feel wealthier. So you feel like, oh, hey, I got money. I have more money now. I can spend a little bit more.
Yeah, you may want to do some home improvements, and you
That's
say, you know what? I don't have to take a loan. I could pay cash.
Right.
I want to buy a new car.
Money.
I want to go on a nice vacation.
Right.
I want to help the kids out with something. So you've been spending some money. What we've been seeing, though, is many people's bank accounts, not investment accounts, bank accounts have been significantly depleted.
Right, because your first inkling is to go to your bank account to buy whatever it is you want or pay your credit card out, however you do that. So all of a sudden you look at your bank account and you have an emergency, a need for some money, and you're down to $5,000 when you always used to have a safety net or emergency fund of $30,000 or $40,000
Whatever
in
it
the bank
is.
account.
3 to 6 months of your expenses.
That's right.
And that's what we've generally advised our clients. And so when we've been having reviews with our clients, we're noting that despite the fact that their investment portfolio has grown, their
Right.
bank accounts have shrunk.
Yes.
And so you've heard the term, buy low, sell high.
That's right.
Well, here's the thing. We're now sitting, hovering near all-time highs in the stock market.
That's right.
Wouldn't this be a great time to rebalance the portfolio?
And we learned this lesson a long time ago, right before the financial crisis.
Right, in 2007 and 2008.
Right?
And we learned a lot as well here. And
That's
we did
right.
as well as our clients. And we don't want to see our clients faced with a situation where, oh my God, you've now shrunk the bank account and then boom, the market drops 20, 30%. And now you need money for some commitments that you've made and you hadn't replenished your cash account yet.
That's right.
It's time to take some money off the table, perhaps. Everybody's situation is different.
That's right.
But if your emergency fund or money in the bank isn't reflective of 3 to 6 months of your expenses, or if you have perhaps a wedding or a major purchase or something like that coming up in the near future.
And it's shrinking in value, that bank account.
Yeah. And I'm not talking about in the near future in the next couple of weeks. Within the next year,
That's
or perhaps two, it's time to take some money off the table. Yeah, maybe you'll have to pay some tax, but you'll feel a lot better paying tax than having to sell something at a depleted price if the market goes down.
That's right.
And you said, oh, well, I should have sold it when it was here. This is what buy low and sell high is all about.
That's right. And you know what? You have to think about this as at some point, you're going to need to pay those taxes if you ever want to use that money. And sure, you always, oh, well, I'll put it off. I'll put it off. I'll put it off. Don't put it off. Not when you see your accounts, your bank accounts depleting significantly. Don't just sit there.
And I find that so many of our clients make these assumptions about how much the tax liability will be. Well, we've got this great tax planning program where we can look at your overall situation, help you understand where it makes the most sense to pull assets to sell from. Maybe it's a retirement account. Maybe it's a personal investment account. Maybe it's an annuity. Maybe it's an insurance policy. Whatever it is, we can look at the right place to get you the money you need, rebalance yourself appropriately so that you are well positioned both when you were positioned before, now, and in the future.
That's right.
And that's what we call financial advice in a language you can understand. And if now is the time for you to get serious about your financial planning or investment management needs, we hope you'll give us a call. Our phone number here, 978-531-8108. That's 978-531-8108. You can schedule a free initial consultation with us. How about that? Or you can visit the web, our website. You can learn about us. You can visit or receive our free weekly newsletter that goes out every Friday at 10:30 in the morning, Eastern Standard Time. The website is freedmanfinancial.com. That's Freedman.
2 E's in a day.
Financial.com. Go to the bottom of any page, put in your name, your email address, and you will be added to the list of the over 7,000 subscribers that have been receiving our newsletter since March of 2009. Long time. We haven't missed a week ever, and we write our own newsletter. That's going to do it for us this week. Just to recap, number one, if you're interested in looking at SpaceX or any other company that might be filing for an IPO, the best way for you to get exposure is to look and do some research to find out if a mutual fund already owns the shares. Number two, if your bank account has been depleting and it's time to bring it back up to where it should be, that 3 to 6 month level, that's right, don't wait. Let's take some money off the table from your investment portfolio and replenish that bank account. That's going to do it for us this week. Have a wonderful week, everybody. We'll be back with more dollars and cents and financial advice in a language you can understand. Have a great day.
Enjoy.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.